The S&P 500 just gained over 12% in only 13 days. What's next? I quantify it all in today's REKTelligence report. As a friendly reminder, everything in today's show is for informational purposes only. There is no investment advice given. All right, let's get into the show. Hey everyone, welcome. I'm Dave. This is the All Markets Report where I quantify current market action across asset classes, and we've just seen a monster stock market rally. That's today's focus. Let's get into it. We've just seen the S&P 500 index gain more than 12% in just 13 sessions. Absolutely monster rally. We've also seen it close at an all-time high. So today's query is going to be very similar to that. Number one, the greater than equal to 12% gain in just 13 sessions. And number two, it closed at a 1-month high. And the reason for that, as opposed to an all-time high, is we're going to get a lot more instances, a lot more to look at in the query. The market has certainly climbed a wall of worry, as the adage goes. Pretty impressive. So we'll see what this looks like historically in just a minute. Now the exit will be variable n days later. You'll see what I mean in just a few minutes. And the sizing for the stats is essentially 100% of equity in every trade. Technically in Pine Script, it's 99.9%. This avoids missed signals. And normal sizing will depend on each individual trader, of course. So typically much smaller than the whole account. Here's a somewhat zoomed out picture of the S&P 500 index, or SPX. Look at the lower right-hand side. You see the orange histogram and the white box. This indicates that the 12% or more threshold has been reached. Upper right-hand side, you can see price has been tagged with a long tag and an arrow indicating, again, that the conditions have been met. This setup has followed many noteworthy instances in 1982, in 87, in 2002, 2009, 2020, and the market top in 2000. Traders, crypto is not a wild, unruly market. It's an asset class with 500% more time for price discovery and opportunity. My new course, Crypto Trader's Edge, is now live through Algo Advantage, one of the top quant pods and academies out there. A full systematic framework, backtesting, strategy development, validation, real edges with full code, not hype. Links in the description, or head to my Substack at REKTelligence. Now back to the show. Let's start with a very short-term hold of just 1 day. Using the entry conditions and this 1-day exit, from 1900 to the present, we have seen 82 instances of these conditions in the S&P 500. The hit rate is 53.66%. That's 44 out of 82 have been profitable. And the profit factor is north of 1 at 1.32. The average trade here is 0.53%. Nothing incredible, but also this is a 1-day hold following these conditions. And the equity curve shows that formerly this showed great momentum, whereas basically kind of in the middle of the equity curve, you see this has stopped showing that same impulsivity to the upside. Let's move out to 5 days, and we can see historically we've seen 48 instances. The hit rate drops to 47.92%, and the profit factor is barely north of 1. Across all 48 instances here, 1900 to the present, we only have seen a total P&L of 10.33%. This is nominal. Statistically, it's not noise, but it is not really productive. Let's move out to 10 days, and we can see even less productive. Sure, the hit rate now climbs to north of 50% at 55 and change, but profit factor has fallen below 1. So short term, 5 days, 10 days, we shouldn't expect much from the current conditions. Let's move out to 1 month and things improve a bit. We've seen 32 instances. The hit rate is low, 43.75%. 14 out of 32 have been profitable, but the profit factor is now 1.244. That's not amazing, but certainly it's the best we've seen in what we've looked at here. Let's look at a 3-month hold, and not surprisingly, given more time, 16 instances here. We see profit factor now jumps up to 2.576. Hit rate is decent, 56.25%, and overall looking much better. As I mentioned before, these conditions we've just seen in the current market often follow major market lows. They don't usually occur at major market highs. Here is one in August of 1982. After a 2-year bear market, the market really woke up with this powerful upthrust and triggered these conditions and was the start of a new bull. Let's look at much more recently, COVID, this incredibly violent sell-off as the global economy stopped and the pandemic was just underway. And we can see after this massive sell-off, we saw these conditions met, and that was the start of a monster run to the upside. There are many more instances of these bear market lows or quick violent lows where we've seen these conditions appear. But what's interesting to me is this one right here. We see March 24th, 2000. This was one day after the 2000 top. This is the .com market top or high. And following that, we did not see equities put in a new high for several years. I would argue that current conditions are far more similar to this on a technical basis, where the market has just rallied to a new high, much like we saw here. All right, everyone, we have just seen a monster market rally. Very impressive. The stats following such a rally, however, are not that impressive. You have to go out to around 3 months to get a decent looking potential trade horizon. What is a bit concerning is these conditions typically happen following major market lows. Look at the list I gave earlier and look them up. Lots of compelling major market lows, not usually at a market high. The one time it did occur at a market high, it was a high for many years forward. That is the closest analog to what we see today. Not a prediction, but a bit of a concern. Thanks for watching. I will see you in Thursday's Edge Report. Until then, trade smart, live well, and cheers from the Caribbean.